This story will tell you what a disaster it would be if Rick Perry got elected. Now, it is a story of his questionable ethics, but I think even more importantly is the trust that he puts on a very questionable advisor. I'll tell you who that is in a second. First, it's a story of how he tried to get the teacher retirement fund in Texas, specifically the Texas Teachers Retirement System, to buy into a scheme cooked up by a Swiss bank. The scheme involved that Swiss bank profiting from the death of those teachers. Now, you got to be thinking, oh, come on, that can't be true. Absolutely, positively true. Now, why and how? Well, what they did was they realized that they could do this for public employees what they were already doing for private employees. And private companies, and they got in a lot of trouble, including Walmart for this, were taking out life insurance on their own employees. And then when they died, they'd cash in on that. Now, they had different ways of profiting from that because, you know, life insurance is a gamble, right? But they would reduce the gamble because they got tax benefits out of it. So they had found a way to basically get this huge tax benefit, and, you know, if the people died earlier, they would make even more money. In fact, in the Texas case, they wanted to specifically insure retired teachers between the ages of 75 and 90 so they'd hurry up and die. Okay? So this is, I mean, loathsome. So, well, you might say, hey, maybe the teacher retirement fund was in trouble and they needed it. It's that, no. It was stacked up with a 94% funding ratio. It was perfectly healthy. In fact, they were trying to figure out where else they could put the money if any money was going to come in. How about the teachers? Were they going to benefit from it? They'd get, at best, they said, well, maybe we can get you $50 to $100. But you got to think about what a terrible idea this is. Because if you set up a system where the bankers and to some degree the government benefits from people dying quicker, well, they might be motivated, you know, and we hope they wouldn't be, but financial incentives being what they are, they might be motivated to make sure that that happens a little quicker. So how could they do that? For example, Rick Perry, as governor, could cut health care for retired teachers. Now, look, it's complicated. Could he get that through the legislature in Texas, et cetera? What would that exactly mean? But why would you even take that risk? And in fact, that's why the private companies got in trouble. For example, Walmart. They give terrible health care to their employees, and then they take out life insurance on them. And by the way, it's called dead peasants insurance. That's what the industry called it. And think about how gross that is, dead peasants insurance. That's how they view you, right? And that's what Rick Perry wanted to do in Texas. So who's the advisor who came up with this brilliant idea? Phil Gramm. Now, Phil Gramm is a retired Republican senator from Texas. Why is Phil Gramm so important? Well, he's the guy who deregulated the financial industry in the first place. It was his idea during the end of the Clinton years, and this is the one thing that I think Clinton did massively wrong. He agreed to those Gramm-led bills where the banks got the regulation lifted. And then guess what happened? Phil Gramm immediately went to go work for a bank, which then took advantage of that deregulation to make much more money for their executives in the short term, and then eventually, of course, they collapsed and needed the United States government and the Fed to bail them out. But who cares? Phil Gramm and his buddies made money in the meanwhile, right? So back in 2003, Phil Gramm takes Rick Perry aside and says, I got a great money-making scheme for us. And by the way, also gives Rick Perry six-figure donation to his campaign. What a wonderful coincidence. Everybody in power gets paid, and then when you die, they get paid even more. Now, apparently Rick Perry thinks, and I'm going to quote here, that Gramm, this is one of his advisors, he says, quote, he considers Gramm an economic genius. Gramm is the exact opposite. He couldn't be a bigger problem. I mean, I remember when John McCain was running, and there was talk about how Phil Gramm might be Treasury Secretary. I said, on that alone, no one in their right mind should consider voting for John McCain. Phil Gramm, if he got into power or advised anybody in power, the banks would run roughshod over us. They already do. Can you imagine it getting worse? The only person who could make it worse is Phil Gramm, and he's the top economic advisor to Rick Perry, and Rick Perry, being the moron that he is, looks up to him like, oh my God, what do I do, Phil? You tell me you're such a genius. And then Phil says, oh, well, take advantage of your the teachers that might be dying in Texas. That's going to be great. It's going to get us a lot of money. That's Texas politics for you. If Rick Perry gets elected president, we're in a world of trouble, man. This guy has no scruples. There's nothing he won't sink to, and he has the world's worst advisors.